Good morning, everyone. Good morning, ma'am. Today we're talking about job costing and modern cost management system. Our goals for this job order costing system chapter are to learn about basic concept in job costing, information system for job costing environments, tracking job costs in the corporate ledger, accounting for actual and applied overhead, and also job costing in service not for profit and governmental environment, and lastly, modern management of cost and quality. Today we're talking about job costing concepts. So what is job costing? Job costing is best suited to those situations where goods and services are produced upon receipt of a customer order according to specification or in separate batches. Examples could be the manufacture of aircraft or automobiles or something more significant according to customer specification. In a future chapter, we look at process costing concept, which is an alternative models that apply to goods that are produced in continuous processes. If we manufacture paint, for example, you could imagine a process where the paint is produced and packaged continuously, and it's so hard to identify for these discrete jobs. Here we're talking about in this discrete in nature. Each job is somewhat unique. Materials and labor can be readily traced to each job. So each job is unique and materials and labor can be readily identified. So in each job perhaps entails a unique amount of material and labor. So one of a good example for this could be an electrician. I've got an example. So Jack Castle owns an electrical contracting company called Castle Electric. So Jack has own electrical company called Castle Electric. And on a typical day, Jack will arrive at the shop early and leave at the day's work assignments. So when Jack arrives early at the office, he starts lining out day's work. And Jack is paid $25 per hour for his time. And also, he does not work on any specific job. His time is spent doing inspection, getting permits, managing inventory, and other tasks. So, Jack got a number of electricians who work for him, and one of these is Donny Odom. And he gives them their assignments and equipment and the parts that they'll need for the day. So, on July 14, Donny Odom, one of the electricians, had 3 tasks for the day. So, this is the 3 tasks. Okay, job A, cleaning and reconnecting an electrical connection and replacing a floodlight atop a billboard. And this is going to require a light bulb, and the cost of the bulb is $150. Next is job B, replacing the breakers and an old electrical distribution panel at an office building. So which is, it's gonna take 20 breakers and they're $20 a piece. And lastly, job C, pulling wire for a new residence under construction and to use about 500, and we're expanding to use about 500 feet of wire that costs $0.14 per foot. And so if Donny is paid $18 per hour, his time on July 14 was allocated as follows. Okay, 1 hour on the billboard, 2 hours on the electrical panel, 3 hours on the residential installation, and lastly, 2 hours on indirect job administration and travel. So this filling out his time report things of this nature. So he also used some indirect material that are by themselves not significant in cost, but cumulative the cost can mount up. So Donnie also used the following materials. These are the indirect materials. A roll of electrical tape at $3 and also a box of wire nuts with 60 nuts at 50.05 each. So Donnie also of course used tools and the truck and the equipment and so forth. That's all of it. And lastly, and also we need to track the three cost components: labor, materials, and overhead. So that's it for that is the next reporter.
Good morning, everyone. My report is about tracking direct labor and direct materials. In tracking direct labor, it is the list of specific job and time spent of each job as well as the time spent of tasks that cannot be traced to a specific job. This is the example time report of the 8 to 8:30. The job name is admin. Task, assignment, and load. Client, none. Admin hours, 0.50. And 8:30 to 8:45, the job name is travel. Task, none. Client, none. Admin hours, 0.25. 8:45 to 9:45, job name is job A, which is service and replace bulb. Client, image advertising. Direct labor hour is 1 hour. 9:45 to 10:15, job name is travel. Task, none. Client, none. Admin hours, 0.50. 10:15 to 12:15, job name is job B, which is replace breakers. Client, Techway office park. Direct labor hours is 2 hours. 12:15 to 1 is lunch. 1 to 4, C, which is wall wiring. Client, Mr. and Mrs. Livebrand Home. Direct labor hours, 3 hours. 4 to 45, travel and admin. Task, return to shop and unload. Client, none. Admin hours, 0.75. And every 15 minutes in admin hours is equal to 0.25. The total of number hours is of admin hours is 2 hours and direct labor hours is 6 hours. Tracking direct materials, it is the record of material released to each job. The documents used in this process is called a material request or material requisition form. This is the example documents of the materials, light bulbs, job name, job A. Quality, 1 unit. Per unit cost is equal to $150. Standard cost is $150. 1 unit times 150 is equal to 150. Breakers, job B. 20 units. Per unit cost is equal to $20 each.
So, hi ma'am, I'm Aika Jennifer Badaos, and I'm the one who assigned in tracking overhead. So, the first question is, how hard would it be to track indirect materials? And Jax is having a hard work to track the indirect materials if we check one by one. And because indirect materials are the materials not really including in production but involved in expenses. And next, how wire nuts were used on bellboard. So, wire nuts that jacks were used on the bellboard are 60 nuts and use of electrical tape, 1 roll or 500 feet. So electrical tape is 1 roll and $3 per roll. And then the answer is cost of 3 per roll of electrical tape in nuts are $3 per each. That's the cost of these items, the wire nuts and the electrical tape. So the next one is, what about indirect labor? And the second question is, indirect labor is about Jack's that how he spent the cost of items and expenses in the indirect labor. So the answer is indirect labor is same as indirect materials. This is services that they cannot usually involve in doing productions because it's just a substitute or temporarily but involved in the expenses. So pre-rata based on hours, well, because it's basis on daily shifts time on the table because there's a total of 6 hours of labor that every job cost of 2 hours. And then job time I consume, the total expected is $150,000 that he figures that his 4 electricians will work a total about 7,500 rather direct labor hours being during the year. This question is the answer where I base is from the Castle Electric table. So this is the Castle Electric table where I bases. This table Castle Electric is this term provides essential documentation to safeguard and track inventory. So this Castle Electric is must be needed to be monitor the track inventory to for the manager na not to um, fails to monitor the labor and their expenses, cost amount, and indirect labor and indirect materials, also in my direct materials and also in direct labors. Also, the Casa Electric is provided about the cost expenses and materials, the use and billboards, where the headed of jacks. So let's proceed to the next one. The job cost sheets. This is the next table. The first one is the Castle Electric and the second one is the job cost sheets. This cost sheets is the preceding information can be logically transferred to a job cost sheet that is a compilation of cost data for a specific job. If you can see, this job cost sheets is involved of the employees form reference, the direct labor, hours, rate, total, and direct material, the quantity, unit cost, and total, and applied overhead, the basis, quantity, rate, total, and the total of the cost. So I explained about this job cost sheets. So this is the direct labor info found on the job cost sheets is taken from Donny Adams daily time sheets to indicate daily time sheets of July 14, 2015. So for Donny Adams, Donny's material requisition form was used as the source of document for compiling the direct material informations. So some types of cross-referencing system needs to be developed to allow one to trace specific cost allocations and to their source documents, of course. Overhead was applied directly to the job cost sheets based upon the predetermined overhead application scheme of $20 per direct labor hours and convert to 2 peso. Total of 1,040 pesos because the peso dollar is rate of 52 pesos in Philippines. So this job cost sheets is referring about the cost amount of one employee and their hours rate. And that's all, ma'am. Thank you. The next reporting is the expanding the illustrations, which is reporting the other members.
Good day everyone, I am Harlene Flores, your next presenter for today. I will discuss to you on how to compute the extended cost. First, here is the table for daily timesheet, which has 7 columns. The start, stop time, job name, task, client, admin hours, and direct labor hours. Now we will compute the extended cost, the second table, the material requisition. It has a column for material, job name, quantity, per unit cost, and extended cost. To compute for the cost, we just multiply the quantity in per unit cost. For example, 1 unit times $150 equals $150. 20 unit times $20, 20 unit per times $20 equals $400. So 500 feet times 0.14 equals $70. So we will use this extended cost and job cost sheet as the total for the column for direct materials. To compute the total in the job cost sheet, we simply add the total labor and the total direct material and the applied overhead. And in computing the direct labor, we simply multiply the hours. We use the direct labor hours and the daily timesheet and rate. And direct material would multiply the quantity in unit cost. Quantity in unit cost. And lastly, for the applied overhead, we should multiply the quantity or the labor hours for the rate of $20. And that will be my report for today, and thank you. God bless everyone.
Good day, ma'am. I am Ms. Macabalas and I'm here to tackle about the job costing and the cost management system. So, this is another expansion of the illustration. This is a home construction project that spends many days. So, as you can see, to July 14 to 16, a couple of different electricians working there. In the table, it shows the direct labor, direct material, and applied overhead. So, on July 14 to 16, Andy has a total of 21 working hours with a rate of $10. While Webb has a total of 23 working hours with a rate of $22. The total of direct labor is $716. And in direct material, Bev and Andy uses wires, junction boxes, and a can light. The quantity of each is multiplied by the unit cost, and its total is $755. And in the applied overhead, the labor hours is 44 that shows indirect labor times the rate of $20 that equals to $880 with a sum total of Oh, the job cost sheet has a total of $2,351.
So, I'm Arsik Pangadlo. I'm the last reporter of Group 1. So, my topic is database versus spreadsheet. So, what is a spreadsheet? It is an electron ledger, an electronic version of paper, accounting worksheets. It was created to facilitate people who needed to store their accounting information in tabular form digitally. So, it is possible to create tables in a spreadsheet, and databases are interchangeable, while in reality they are not. There are similarities between the two. Both can contain a large amount of tabular data and can use existing data to make calculations. Third, neither spreadsheets nor databases are typically used by a single person, so many users will work with the data. The difference between the two forms of data storage lies in the way these three characteristics are implemented. So, okay, imagine a spreadsheet. Every cell is treated as a unique entity. It can store any type of information, a date, an integer value, a string name, and then not only can we have a different types of values in various cells, but we can also apply a specific format to these cells. This is not inherent to databases. They contain only raw data. Each cell is a container of single data value. It is the smallest piece of information there is. You must be present the type of data contained in certain field. This feature prevents inadvertent mistakes. For example, in a field containing data values, should the user try to insert a string, the software will show an error and she will have the chance to correct herself. This won't happen in Excel. If you insert a string in the column with the date value, you would not obtain an error message, and Excel will store the string.
My second report is moving beyond the conceptual level. Thus far, we have looked at a simple and understandable illustration of job costing. What this illustration fails to show is the sophistication of the information system that are used to track job costs in larger organizations. So, to track information of job costing is through the castle of electric, which is the two materials requisition in job cost sheet used for monitoring and track inventory to avoid failing in job cost.
Second, the debits and credits that are needed to track the accumulation and application of costs within a company general ledger system. Debits and credits are used in a company bookkeeping in order for its book to balance. Debits increase asset or expense account and decrease liability, revenue, or equity accounts. Credits do the reverse. When recording a transaction, every debit entry must have a corresponding credit entry for the same dollar amount or vice versa. What is the difference between a debit and a credit? Debit and a credit are bookkeeping entries that balance each other out. Consider that for accounting purposes, every transaction must be exchanged for something else of the exact same value. To simplify this explanation, consider that a debit entry always adds a positive number and a credit entry always adds a negative number.
For placement, a debit is always positioned on the left side of an entry. A debit increases asset or expense accounts and decreases liability, revenue, or equity accounts. A credit is always positioned on the right side of an entry. It increases liability, revenue, or equity accounts and decreases asset or expense account. How are debits and credits used? Debits and credits are used to record transactions in a company chart of accounts. A chart of accounts classify income and expenses. The five major accounts are as follow as asset account, expense account, revenue account, liability account, equity account. Asset account. Assets are items that provide future economic benefit to a company. Example, cash, account receivable, inventory, prepaid expenses, property and equipment, vehicles. Expense account. There are charges related to the day-to-day operation of business. Example, subgroups of include advertising, utilities, rent, travel, salaries. Revenue account. Revenue account are accounts related to income earned from the sale of products and services or interest from investment. Example, sales revenue, service revenue, interest income, investment income.
Liability account. Liabilities are obligations that the company is required to pay, such as vendor invoices. Examples, account payable, income tax payable, loans payable, bank fees. Equity account. These are net asset entries. Example, available for sale securities, stocks, bonds, mutual funds, real estate, pension and retirement plans, derivative instrument, debt security.
And the last, the ultimate disposition of the difference between applied and actual overhead. So, actual is a direct expenses, which is the direct materials and labor. Applied is the estimated rate.
So this is the example of actual. And this is for applied.